So this is problem 7.3b, and you're going to want to have your book open to that problem and probably print out the notes that go along with this one. And basically, this problem takes you a little closer to the real world. It's going to, we're going to have to rummage through the problem to find the information we need. And I'm going to do it as if we were doing it in a real office, where you would not look for errors unless you had to. In other words, you do all the normal entries first, and then if the two adjusted balances didn't balance, we would then look for errors. So that's how I approach this problem. So we start looking in the book, and you can see that on the first page of the problem, it gives you the cash balance of $13,287 as of May 31st. So $13,287 would be our balance per books. Okay, we move to the next page, and you can see that it gives us the bank balance, $13,332. So we have a good start. The first thing says there was a debit memo of $35 for checks that we ordered, so the bank deducted that directly from our account. We need to tell our books about it, and that check order was for $35. So that's going to be an adjustment down. Number 2, when we read it, we can see that's an error, so we're going to ignore that for now. Number 4, it gives us the outstanding checks and the deposits in transit. So we know we're going to add deposits in transit, and we know we are going to deduct checks outstanding. These are the deposits that we have entered on our company books, but they haven't cleared the bank, and the same for the checks. So our deposits in transit, we're going to add $2,600. The checks outstanding, we deduct the 1,225. And when we add and subtract, we go plus this, minus that, we get an adjusted balance of 14,707. And if there's no errors, that might be good. Okay, so now let's see what other information. We've got number 4, that's another error, we'll skip for the moment. Number 5, a note receivable was collected. We can do this. Okay, so we're going to add the collection of note receivable. Okay, so they collected a note receivable for $4,500. We add that. There was interest revenue associated with that, so that would be another adjustment. Interest revenue of the $80. And then there was also a collection fee associated with this of $25. Let me double check that. The collection fee of $25. Okay, so then number 6 is also an error. We're going to forget about that for the moment. And then the non-sufficient number 7 is an NSF check from a customer, and that we're going to have to deduct from our account, from our customer. We thought we had the money, but we don't, and that was for $1,308. So this is what you would actually do. You would add and subtract down, and you would come out with $16,499. Now obviously we don't balance, and so now's where you go back and look at the errors. Okay, so I don't have a whole lot of room to do errors here, but we'll do the best we can. So the first one is item number 2. It says cash sales were deposited in the bank. And how I like to do this is we've got a deposit error, but the actual deposit, and this is that was made to the bank, okay? The actual deposit was $1,720. And that's the correct amount, okay? That's good. The wrong amount entered on the books So it was $18.20. So we're going to have to make an adjustment of $100. And the question is, which way? Do we add it or subtract it? So I sometimes round this, it makes it sound a little easier. So we actually put in about $1,700 into our account. That's what we really put in. But we told our books we put in about $1,800. So our books think we have $100 more than we do. So that adjustment is going to be down. So when we do this on the bank statement, we would say less deposit error, and we specify the date and everything, but that would be $100, okay? And now we're down to, well, I'm going to do this when we're all done. That would change our balance, so we'll re-add this when we're done with all our errors. Okay, so that's that one. The next error is an error on writing checks, and that's on May 18th. They wrote a check for, there was a check issued for, and this is the right amount, so the check was issued for 9/11, but it was entered on the books, so the wrong amount on the books, the wrong amount on the books is 119. So here we've got an adjustment of 792 that's needed. Okay, so we wrote a check for about $900. We sent out a check for $900, but we only told our books we sent out 100. So this also, we're going to have to adjust down. Okay, so I'm going to have to squeeze this in here. So error on check number, I think it's 1181, and we would have to deduct that 792. Okay, so we found those two errors. We would add this up again, and we would get 15,607. We still don't balance, so we go back and we look and say, oh, well, maybe the bank made a mistake. And so, sure enough, if we look at number, which one is it, 6, this is where the bank included some other company's check in with our checks and took, somebody else's, out of our account when they shouldn't have. This is a bank error. We don't have to adjust our books. Our books are fine. We call up the bank. We show them the, the improper check that was in with ours, and they have to adjust their accounts. But to get our bank balance to balance, we have to just make this, notation here that there was a bank error, and they need to add back that $900 to our account. And so when we get to that point, it would be balanced at 15,607. Okay, but obviously we're not done yet. We have to make the adjusting journal entries. So you can refer to this. You're going to refer to this on the printout that you have, and I'll just quickly erase all of this, and we'll do the adjusting journal entries. The journal entries, as I have said before, I do one for the additions and one for the various deductions. So in this case, we would be adding cash, we would be debiting cash at 531, I believe, is that right, 530, for 4580. And the account would be note receivable. I'm just going to abbreviate here, note receivable for 1400, and we would go interest revenue account would be for the $80. Then there would be the deductions to cash. The miscellaneous expense, we could put the check order under that. Some companies might use I don't know, supplies, but we're going to call it miscellaneous expense. The collection fee is also probably going to be miscellaneous expense. You could combine those if you'd like to, but just for clarity, I'll keep them separate here. So one's the collection fee, one's the check order. The $100 the deposit error, we would be debiting to sales revenue because we actually had less sales than we thought, okay? And then the non-sufficient funds check would be to accounts receivable. To put that back on our books, we have to send them a bill for that, for the 1308. Okay, and what did I miss here? Oh, the check, the error on the check would be a debit to accounts payable for the 792. Okay, so we would be reducing our cash balance by the total of that, which is 2260. Okay, so when it comes to doing the journal entries, what you want to do is to think about, you know, what, especially with the errors, what would have been the original journal entry, and then you have to make an adjustment to that original journal entry. So when we have a deposit error, its chances are going to involve sales revenue. If we have an error on one of our checks to our vendors, it's probably going to be an accounts payable that's going to be involved there. Okay, so if you have questions on any of this, you know, you just email me.